numbers are disappointing. It's a clear miss on the revenue front, despite the expectations being moderated mid-quarter. But the stock has already seen a fair amount of correction in the recent past. Yesterday, it was down 2%. But I do suspect that the stock could still lose another 2 to 3%. But it depends on the outlook Infosys also throws up. On the numbers per se, on revenues, a dollar revenue growth of only 0.3%. Estimates were at 1.8%. A volume growth was paltry at 1.3%. And constant currency growth of 1% is the lowest that we've seen for the September quarter on record. So those were disappointing. But on the flip side, the company managed to improve their margins by nearly 95 basis points to 26%, and therein lies a beat. And that has helped in cutting down the cuts on the EPS side, because the analysts have pared down the dollar revenue estimates, but on account of the margin beat, the EPS cuts have been quite limited. The three key reasons for the revenue miss: softness in BFSI, particularly in North America. On India, there was a 180 crore revenue which got deferred from Q2 to Q3, and retail, there were some delays in the project ramp-ups. But on account of bunching up, especially of the India revenues which got deferred, the management is confident that Q3 and Q4 will be better than usual. Also, very importantly, they go on to say that the current headwinds that they're facing in the form of BFSI and retail are cyclical and not structural in nature, unlike the headwinds that we saw in the prior year, which were Diligenta, Japan, etc. And those saw a multi-quarter revenue decline. But these, he believes, are cyclical, and therefore there is no reason to believe that they will extend themselves into FY18. He also maintains, the company maintains their margin band of 26 to 28%. But from an analyst point of view, the company's revenue growth has been moderated very sharply now. We started the year expecting a 11 to 12% top line growth in constant currency. Today they stand at 8% on a consensus basis, and if you pull up the map in the last 3 years, FY15 was 17%, 16 was at 11.9%, and now we are down to 8%, which basically means growth is practically halved in a span of 2 to 3 years. The other concern is, I don't think the company also has that much of a revenue visibility. In FY16, you had one set of headwinds: Diligenta, Japan, Latin America, etc. They don't exist today, but it's been replaced by a new set of headwinds in the form of BFSI as well as retail. And retail wasn't even a concern till August, because when the company came out and announced to the exchanges that we could expect some softness in BFSI in North America, they didn't mention retail. So clearly retail has cropped up in the last 2 months itself. So there is concern that even the company or any company right now in the Indian IT industry does not know what the new headwinds could emerge in a matter of few months. So as of now, he's calling the current headwinds as cyclical, but the question is, you don't know if you're going to see a new set of headwinds in the coming quarters.